So, could pensions be targeted? Pensions are another area attracting a lot of budget speculation. This happens before nearly every budget. So, firstly, please don't withdraw money from your pension purely because of a newspaper headline. We've seen this before. People hear rumours that pension tax relief or tax free cash might be reduced, panic, take money out, and then discover the rumoured change never actually happened. And once you've made some pension decisions, you may not be able to simply put everything back the way it was. But there are good reasons pensions are on the radar. The government gives substantial tax relief to encourage pension saving. And so for business owners, employer pension contributions can be a really valuable way of moving money from the company into a long-term personal wealth. And so what are we actually watching for? First, inheritance tax. This one's already happening. So from the 6th of April 2027, most unused pension funds and pension death benefits will be brought into your estate now for inheritance tax purposes. That's a significant change. So historically, pensions have often been viewed not only as a retirement vehicle, but also as a very tax efficient way of passing wealth to the next generation. Now, that planning assumption is changing. Second up is tax-free cash. At the moment, most people can generally take 25% of their pension tax-free, subject to lump sum allowance, which is currently £268,275. There's a speculation that the Chancellor could reduce that allowance, but, and this is important, there's currently no confirmed government proposal to do that. So please do not make an irreversible pension withdrawal based on speculation. Make sure you are getting advice. Third, contribution tax relief. The Chancellor could potentially look at the annual allowance, the rate of tax relief available, salary sacrifice, employers' contributions, or the national insurance treatment of pension contributions. Again, these are areas to watch rather than confirmed 28th of October changes. Now, why does this matter for business owners? So for owner-managed businesses, pensions aren't just about retirement. They can be part of a wider question. How do I get value out of my business tax efficiently? That might include salary, dividends, pension contributions, building investments personally, or ultimately selling the company. The right answer depends on your age, your objectives, the company's profits, your existing pension contributions, and what you actually want your money to do for you. So a relatively small technical change to pensions can have a very significant impact on long-term planning. So my tip is don't make pension decisions because you're frightened of what the Chancellor might say. Instead, seek advice, but also understand where you are now. What have you already contributed? What annual allowance do you have available? Could carry forward be relevant? Like, what is your existing pension value as well? Also, what does the 2027 inheritance tax change mean for your wider estate? And most importantly, what is the pension actually for? So is it for retirement income for you? Was it just tax efficient extraction from your company? Or is it passing wealth down, or a mixture of the three of them? Because those objectives may now need to be brought about differently. Now, important, pensions are regulated financial products, and pension and investment decisions do need to be considered alongside your wider personal circumstances. You must speak to your regulated pension or financial advisor before making any of these changes. Your accountant can help you to understand the tax consequences and how pension contributions can interact with your company and that wider tax position, but your pension advisor should advise you on the suitability of the pension or investment decisions itself. So, quick recap now that the little warning's done. There is already a confirmed inheritance tax change coming from April 2027. There is speculation around tax-free pension cash and other reliefs, but there is currently no confirmed 28th of October change to the tax-free lump sum. The biggest message, plan, don't panic. Talk to your accountant about the tax, talk to your pension advisor about the pension, and don't let a budget rumour make a long-term financial decision for you. Make sure it works for you too.